Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka.
And I'm Yatin Mota.
Well, Yatin, after a downbeat start to the day, we staged a remarkable recovery. In fact, the Nifty hit that 19,800 mark in intraday trading, even though we shut shop below that level, but it was a remarkable comeback. And of course, it was led by the return of FIIs, Yatin. Yesterday, foreign investors bought to the tune of 550 crore rupees or thereabouts in the cash markets, and that's something that came as a balm. Even at a time when yesterday we saw a very smart rally coming in on the back of bets that the Fed may have come to the end of its rate hiking campaign, and perhaps hopes of more aggressive rate cuts in the coming year. But of course, FIIs turning into buyers came as an additional balm for the markets, and we did reclaim that 19,800 mark. So that's a good news when it comes to the markets. But particularly if you look at the mid cap end of the markets, even they were buoyant today, and almost all the sectors were trading in the green, led by the IT pack. 2.5% kind of gains coming in there, barring the banking pack, which I think slipped in the last hour of trade, as well as the FMCG pack. Most of the indices ended the day in the green, and if you look at some of the movers, you had the likes of Hero Motocorp, that was the top gainer. We will be talking about that in greater details later, but TCS, Tech Mahindra, Infosys, so all four of the top gainers on the Nifty were from the IT pack. Aside of that, you had the likes of Dr. Reddy's, Apollo Hospital, NTPC and Bajaj twins, Bajaj Finance and Bajaj Finserv. After a negative start, we did see the stocks managing to stage a rebound. We'll be talking about that also in greater details as to what led to the recovery in shares of Bajaj Finance after the RBI setback that came to the fore last evening. But of course, among the losers, you had the likes of Power Grid, Axis Bank, Coal India, Tata Consumer, ITC as well. And if you talk about TCS in particular, Yatin, that stock in fact saw its best day in 4 months. Of course, the buyback date, record date for the share buyback has been announced. November 25th is when TCS will consider which shareholders will be eligible for the buyback. So that stock also in focus among the top Nifty gainers. From the mid cap end of the markets, Yatin, lots of movers there today as well.
Absolutely, and if you look at the markets, obviously the Nifty fell almost 100 points from the day's high. So yes, in the last half an hour there was some bit of issue in terms of selling, and Nifty Bank ended in the red. But clearly today the IT stocks were in focus. The mid cap IT pack also doing quite well. But if you look at Nifty 500, we had the likes of Sterlite Technologies, GIC Ray, MapMy India, all of these stocks doing well, 7-8% up for those names. But the correction really continues in stocks like Kalyan Jewellers. That stock is down 5%, and if you look at the 52-week high of 360 rupees, that stock is almost down 15% from the highs it made recently. Jyoti Labs also witnessing some profit taking after continuous up move, especially after the second quarter results. The stock has witnessed a 4% correction today, and so is the case with Concord Bio and Welspun India. Both of these stocks struggling in trade, but a lot of stocks which are at 52-week high. Manappuram yesterday 7% up, today also up 7%, new 52-week high. CESC, Welspun Corp, we have the likes of Sobha Developers, NAM India, ICICI Securities, Idea Cellular, Network 18, all of these stocks hitting fresh 52-week highs.
Well, those are some of the movers and shakers from the mid-cap end of the markets. But of course, let's talk about some of the stocks that are on our radar this afternoon. Starting with Bajaj Finance. Of course, the stock opened lower today. It was down about 2 to 3% in early trade, but it did manage to stage a very smart comeback to, once again feature among the top gainers on the Nifty today. Of course, we know that RBI had asked, the company to stop sanction as well as disbursal of loans under two of its products, Ecom as well as Insta EMI card. Of course, that was because of non-adherence to RBI's digital lending norms that it came out with back in September 2022. But the company has maintained that there will be no financial impact of this move or of this action on the company, and it will rectify its actions as well as comply with the RBI guidelines as well. If you look at what the brokerages have to say about this, is they have also maintained that there will be no material impact on the financials. Most of them have retained their positive and overweight stance on the stock, and target prices have also been retained at the kind of targets that they had set about when the earnings were out last month. But if you look at IIFL Securities, they believe that the two products form fee income of somewhere around 2% of AUM, can drag profitability a bit, but there won't be much of an impact there. Even CLSA, if you look at the stance on the stock, it retains its buy rating, target price at 9,500 rupees per share. It believes that it's more of an operation breach and there's no major violation, and that it should be resolved in the next 2 to 3 quarters. However, this is the only brokerage that has given a calculation as to how much of an impact it will have on the profits. 6% is what this brokerage is envisaging on the impact on profitability due to this action. Aside of that, Jefferies has once again retained its buy rating, target price at 9,470 rupees per share. It believes that, of course, the directive is a negative, but the speed with which this will be resolved is something that the street will be really watching out for. And Morgan Stanley also has an overweight rating. Target price retains, it has in fact retained the target price at 10,300 rupees per share. I think it's the highest target that a brokerage has given on this stock. And of course, it sees near-term pressure, but going forward, it believes that the issue will be resolved sooner than expected, and it will, of course, mitigate the kind of impact it could have on the EPS of the company. But of course, Bajaj Finance, Yatin, the stock, of course, is trading at premium valuations to all the other banks and NBFCs, and even since its earnings, the stock hasn't really done all that well. In the last 1 month, the stock has dropped somewhere around 10% or thereabouts. But we should not forget that it has recently raised capital, and it's looking to enter into newer segments like new car loans, gold loans, MFI loans. So it's a flush with cash. It's looking to safeguard itself from the kind of competition that we are seeing in digital lending. So all in all, brokerages have maintained their positive rating because, of course, the asset quality is also so strong, and margin pressure will be there for a couple of quarters, but then it will overcome that going forward. So it looks like this is a temporary blip, and and how soon this gets resolved is something the investors will be watching out for, and the future trajectory will also depend on that.
Absolutely, and today the stock also staged a good recovery intraday, and one should also know that between the results and the QIP, there was the stock which already corrected 300-400 bucks. So I think from the record levels, the stock is good 500-600 rupees down. And probably today, the opportunity was seen by the market participants, and buy on dips is what worked well in the stock of Bajaj Finance. And as you said, it's a FII favorite, it's a domestic fund favorite stock, wherein every decline is used as a buying opportunity. And these are all strong classical companies with very good corporate governance background. And as you said, the RBI issue might be a small blip and could be resolved in the short term. But yes, till that time, there should be some bit of uncertainty. As CLSA mentioned, there could be a 6% kind of a EPS impact that could hamper earnings moving ahead. But let's see whether or not this issue gets resolved in the short term, because companies like Paytm also have faced some scrutiny by the regulators when it comes to digital loan and client onboarding, and that is a major portion of their business, not for Bajaj Finance. They can probably trade off better in terms of other segments in which they can aggressively go for lending plans. But yes, digital is important, and probably the markets would appreciate if this gets resolved in the short term.
Yatin, the stock on your list, Hero Moto,
so
right?
Hero Moto Corp, that is one stock which was the top Nifty gainer in trade today, 3.5% up, and this was largely to do with the festive demand data that the company provided. Now, Hero Moto Corp said that it has sold nearly 14 lakh motorcycles during the 32-day Diwali period, and the festive period starts from Navratras to the Bhai Dooj. So the entire festive season, Hero Moto Corp says that they have recorded a 19% year-on-year growth. More importantly, this surpassed the previous retail high which was recorded in 2019, which was for close to 12.7 lakh units. So very strong growth coming in for Hero Moto Corp. In fact, the management in the commentary said that the ad campaign Is Tyohar Nayi Raftar, that campaign did really very well. They also had a couple of programs targeting specifically and especially for the festive program. I think that marketing strategy has worked for the company. More importantly, the management said that the rural market growth is coming back. Second half is expected to be stronger than the first half, given the fact that the monsoon was slightly patchy, and the second half usually starts with the festive season, wherein we typically see a demand uptick, and the rural markets, especially in the north, south and east zone, are looking good, wherein there are double-digit growth being recorded by the company, and also the festive season has more or less ended, especially with the Diwali Bhai Dooj, and the management said that the inventory also has depleted significantly with the dealership. So, which means that the wholesale numbers for the next 1 or 2 months could be firm, given the fact that a lot of dealerships would be replenishing their inventories with fresh orders.
Right, Yatin, I want to ask you something, vis-a-vis a Bajaj Auto, Hero Moto hasn't given all that great returns on a YTD basis, 20% yes, but if you look at Bajaj Auto, it has given a 55% returns.
Yeah.
And we've already seen that, every time, the management has a run-in with the tax authorities, the stock really comes under pressure. Do you think going forward that will be an overhang for Hero?
So, I don't think so, because, this is an allegation on the promoter, in the personal capacity, nothing to do with the listed entity. But yes, there is a market perception or a knee-jerk reaction every time that ED or FEMA news comes in, but I think the management has amply clarified, and today's move also justifies, given the fact that a lot of institutional interest is really because of the company's growth prospects, and not some rivalry or some ED cases. I think more or less markets has digested that fact and now is looking to move forward.
All right, those were some of the stocks, and Hero of course has had a good run in today's session at least, and of course rural demand, that was supposed to be one key monitorable when it comes to most of these two-wheelers, so that seems to be coming back, so looks like the road ahead looks smooth for Hero Moto as well. But with that, we've come to the end of this edition of Closing Bell. If you have any comments, leave them in the comment section below, and of course come back and join us at 8:30 AM tomorrow morning with Morning Trade. Thanks a lot for watching from Yatin and me. Stay tuned to Moneycontrol for all your other news and updates.